Ready for a deep dive into some serious financials.
Always up for that. What are we looking at today?
Today, it's all about Bajaj Housing Finance's second quarter results. And let me tell you, they've hit a huge GE milestone.
Oh, yeah. What's the big news?
Get this, 1 lakh crore in assets.
Whoa, that's got to be some kind of record, right?
It's massive. So, expert speaker, you ready to break down what these numbers really mean?
Absolutely, especially in a fast-moving market like India's. There's going to be a lot to unpack about their strategy.
For sure. But before we get into the nitty-gritty, can you give us a quick overview of Bajaj Housing Finance? You know, what they do, who their customers are, that kind of thing.
Basically, they're a big deal in the Indian housing finance world. Think mortgages, loans against property, even financing for developers. They're not just pigeonholing themselves.
So they've got their fingers in a lot of pies.
Exactly. But what's interesting is their focus. They really zero in on those prime customers, the borrowers with a squeaky clean credit history.
Makes sense, playing it safe.
Totally. And it speaks volumes about their approach to risk management.
Okay, low risk, high reward. I like the sound of that. But let's get down to brass tacks. Their revenue, what's the story there?
Well, they've managed to rake in some seriously impressive interest income.
How impressive are we talking?
2,227 crore.
Whoa.
And that's a 25% jump year over year.
No kidding. But hold on, aren't interest rates supposed to be causing havoc right now?
You'd think so, right? But this is where their diversified loan portfolio comes in. It's basically their safety net against major market swings.
Ah, so they're not putting all their eggs in one basket. Smart move.
Exactly. And here's the thing. It's not just about the interest income.
Oh, there's more.
Their fee and other income have gone through the roof, up a whopping 58% year over year. Tells me they're getting strategic about expanding beyond those traditional loans.
Diversifying those revenue streams, I see what they're doing.
Yeah.
Smart. But of course, you can't talk revenue without talking expenses, right?
Right.
Interest expenses are up, which is no surprise given the current climate. But what about their operating expenses? How are they keeping those costs in check while still managing to grow so rapidly?
Okay, now this is where it gets really interesting. Despite their growth, their operating expenses are still pretty darn tight. Only a 10% increase year over year.
Really? That's it?
Yep. And that tells me they're laser focused on efficiency. Now, whether that's through tech investments, streamlining their processes, or a combination, that's something we'd have to dig a bit deeper to uncover.
Okay, so they're running a tight ship, but efficiency can only take you so far.
Yeah.
Right. What about the bottom line? How profitable are they?
This is where things get exciting. Their bottom line looks rock solid, especially when you factor in their net interest margin.
And just for our listeners who might not have net interest margin memorized, can you remind us what that is again?
Sure, it's essentially the difference between what they earn on those loans and what they shell out on their borrowings. Think of it like their profit margin on lending.
Got it. So what's their margin looking like?
Right now, it's sitting pretty at 4.1%.
That sounds decent, right?
Oh, absolutely. Especially with interest rates bouncing around like a ping pong ball lately.
So their NIM is holding strong, but what does that translate to in terms of actual profit?
We're talking about a serious boost in both pre-tax and after-tax profits.
Break it down for us.
Profit before tax jumped a solid 23% to 708 crore.
All right, so they're making money, but what about after those taxes hit?
Even after taxes, they're sitting pretty at 546 crore. That tells me their strategy of sticking with those prime customers and branching out with their offerings is really paying dividends.
So they're managing their money well, but every business needs cash flow, right? How's their liquidity situation? Can they cover their short-term obligations if things get dicey?
They've got a nice comfortable cushion of cash on hand.
Oh, yeah. How much are we talking?
As of September 30th, 2024, they had 3,220 crore just chillin'.
Wow. That's a pretty penny.
Right, but it's more than just having cash. It's about being able to access funds quickly when they need them. And their liquidity coverage ratio tells us just that.
Okay, so what's their ratio looking like?
Hold on to your hats, because it's a whopping 220.9%.
Ooh. And to put that into perspective for our listeners.
They're only required to maintain 85%.
No kidding. So they're exceeding expectations by a mile.
You could say that again. That's a huge green flag when it comes to financial stability.
Absolutely. But let's be real. No financial picture is complete without talking about debt. How's Bajaj handling their debt levels?
They seem to be managing it responsibly, not getting in over their heads.
Always a good sign. What makes you say that?
Their capital adequacy ratio, or CRAR for short, is sitting pretty at 28.98%.
And for those of us who don't speak finance jargon, what does that really tell us?
Basically, they've got a nice, healthy buffer to absorb any potential losses that might come their way.
Smart move, especially in a market that can be a little unpredictable at times.
Exactly.
So they're playing it safe and not over-leveraging themselves. Smart. But what about the road ahead? Have they given any hints about what they've got planned for the future, their financial outlook?
Well, they're playing the cards pretty close to the chest on the specific numbers, which isn't unusual in this game. But we can always do a little detective work, right?
Absolutely. Let's put on our analyst hats.
Yeah.
What can we glean from their performance so far?
Well, one thing that jumps out at me is their consistent growth over the past few years. We've been on a bit of an economic roller coaster globally, but they've managed to not just weather the storm, but come out even stronger.
Impressive. Sounds like they've got a solid strategy and they're adaptable.
Exactly.
They've definitely shown they can roll with the punches.
Yeah.
But what should we be keeping an eye on in the coming quarters, especially with the Indian economy always throwing curveballs?
Well, India's economy is nothing if not exciting, right?
That's one way to put it.
Lots of growth, huge demand for housing, which spells opportunity for a company like Bajaj.
So they're in the right place at the right time, but there's always a but, isn't there?
Of course, it's not all sunshine and rainbows. Interest rates, inflation, those are wild cards that could shake things up.
So it's a bit of a tightrope walk for them.
Exactly. And that's why those financial ratios we talked about, they become super important here.
Okay, so which ratios should we be paying extra close attention to?
Well, for starters, their return on average assets, or ROA, it's sitting at a respectable 2.5% right now.
And then that tells us what exactly?
It means they're using their assets efficiently to generate profit. They're not just letting things sit around collecting dust.
Got it. Any other ratios that caught your eye?
Their return on equity, or ROE, is another big one, clocking in at 13%.
And that's good because
It's a solid indicator that they're generating a healthy return for their shareholders, which keeps investors happy, right?
makes sense.
And let's not forget their knack for keeping those costs down. That's evident in their super low operating expenses to net total income ratio, a mere 20.5%.
Okay, so they're clearly doing something right. But how do they measure up to the competition? I mean, the Indian housing finance market is brutal.
Oh, absolutely. It's a real battleground out there. But Bajaj's secret weapon, their wide range of products.
So they're not just catering to one type of customer.
Nope. They're casting a wide net, attracting everyone from your average Joe looking to buy a home to those big-time developers taking on massive projects.
So diversification is key.
100%. Spread that risk, capture a bigger slice of the market. It's a no-brainer.
Smart. And on top of that, it sounds like they're not afraid to embrace technology to make things smoother, more efficient for their customers.
Exactly. They're not stuck in the past.
So they're tech-savvy, they're playing the diversification game, they're financially sound. But let's be real, even with all that going for them, what could potentially throw a wrench in their plans? How can they keep this momentum going in such a cutthroat market?
That's the million-dollar question, isn't it? And for Bajaj, I think the biggest challenge boils down to one word: sustainability.
Sustainability. What do you mean by that?
It's great that they're expanding their loan book, right? More loans, more potential profit. But, and this is a big but, not if it means sacrificing those strict lending standards that got them to where they are today.
So it's about finding that balance.
Exactly. Because a sudden spike in loan defaults, that could spell trouble, something investors need to keep a close eye on.
So quality over quantity, an oldie but a goodie. What else should investors be watching out for?
Those interest rates we talked about earlier, they're still a wild card. We're in uncharted territory here. And managing their borrowing costs while still offering competitive rates to borrowers, that's going to be a tough needle to thread.
A real balancing act. All right, expert secret, before we wrap up, any final thoughts on Bajaj Housing Finance? What's your expert prediction? What does the crystal ball say?
Well, I don't have a crystal ball, unfortunately.
Darn.
But I can say they've got a lot working in their favor. They've got a solid track record, a smart strategy, and they're clearly adaptable. That counts for a lot. But, and I think this is crucial, the key to their future success lies in maintaining that discipline. Remember, the Indian housing finance market, it's not for the faint of heart. It's fast-paced, incredibly competitive, and demands constant evolution.
Not a market for the complacent.
Absolutely not.
Right.
But for those who can navigate the chaos and come out on top, the rewards can be substantial. And honestly, I think Bajaj Housing Finance has what it takes. They're a company worth keeping on your radar.
They've certainly given us a lot to think about today. It's amazing to see how a company like Bajaj Housing Finance is making big moves in such a dynamic market. For me, the biggest takeaway is their commitment to diversification, not just with their loans, but with those extra revenue streams too. And of course, their laser focus on running a tight ship efficiency-wise. That's something we can all learn from, right?
Absolutely.
Well, folks, that's a wrap on our deep dive into Bajaj Housing Finance. Thanks for joining us today for this fascinating look into the world of Indian finance. We'll see you next time for another exciting journey into the heart of business and finance.